Hello, everyone. Hope you're doing fine. So, yes, welcome to this session, this Sunday session of the week. Basically, we're going to go through the BTC price action. We're going to do a live analysis of the price action and try to formulate a trading plan for the next week to come. So the agenda of this session is going to be as following. So we're going to review first the few trade setups that we had in mind last week, see which ones got hit, which ones are still in progress. And then we're going to erase everything from the charts. And the idea is to start from scratch, like having the bigger picture, and then just dive in more and more into finally elaborating a proper trading plan for the week to come. So during this session, I'm not alone. I'm with my trader friend Pierre.
Hi guys, hope you're doing well. Let's begin.
Yes, let's begin. So, as you remember last week, and if you don't, it's okay. So, last week we had a few trading plan in mind. The most important one, so now I'm in the weekly time frame. I'm just going to zoom in a bit because basically what we want to see. Okay, give me a second. For some reason, this is. Oh, okay. Yeah, it was lagging a bit. Okay, so if I go into the 1 hour chart, what you can see here is that we have this range. And so last week where we stopped here. We stopped, so Sunday 13, yeah, exactly. We stopped around here. So we were dumping and then we had like this higher low that was put in, this lower high that was put in, and what we're envisaging basically is that the price is going to stay within this range. This is exactly what happened basically. You can see that the price didn't hit neither the low, neither the highs, and we are staying inside the range, okay? So we had a few trade setups. So one of those trade setups, the best one in my opinion, would have been the long of this low. So basically we're expecting that the price goes lower because we know that we have a few levels of support below. We expect this liquidity to be taken and then go up. Here, we haven't hit this level. As you see, we're always trading above it. So for me, this trade setup is still in progress and still to be followed. Okay. We also had another trade setup that was more of a short idea. And the short here in this area was basically because we could see that the triangle was forming, is imagining that we fake out the triangle into this golden area, the EMC level as we call it with Pierre, where basically you have the 618 and you can go up to the 6.6% or 6.5% depending on your statistics. But basically this area usually is a very good area of resistance, and so this is why, yeah, you had this confluence, you have other confluences, the point of control of this mini area right there. You had the value area high of the range at the time. And then during the week, what happened, what is super, super interesting is that we had this liquidity that was formed over here. Okay? So you have a liquidity right there. That's created, liquidity here, liquidity here. So really this idea for me is strengthened because of all the shorts that have opened during the week and have probably put their stops here, here, and here. So it would not be a surprise to see during this week a short squeeze up, give get everyone bullish, and then here, because we know there is a major resistance level, start dumping again and resuming the global trend. So actually, out of all our trade setups, first of all, none of them was hit yet, so they're still valid. And not only they're still valid, but for me, they're even stronger than last week. Do you have any comment on this, Pierre, on your side?
Yes, this is very logical because we are in a triangle shape right now, so not every level is going to be hit, and a few is going to be hit actually.
Exactly, exactly. Okay. Just give me a second. I'm trying to set up something, Pierre. Okay, tell me if you see my screen. This would be even better. Are you
Yes,
set?
I do.
Oh, okay, amazing. Okay, so
Yep.
let's go back to what we were saying. So basically, trade setups. Let's keep those in mind. Okay. And now what we want to do is start from scratch. So what I usually like to do instead is actually just create a new layout. Okay. Ah, so we have this problem, right? So let's take an old layout. Yeah. Let's take this layout and let's erase everything from it. Up. Remove drawings. Okay. So what do we have now? Let me just remove the volume as well. And let's go on the weekly. Okay, so here you see on the right side we have nothing. We have the volume, the VWAP, and the volume. Okay, but they are also not being shown. And so the price is here. Okay, so let's start off with the monthly level. So as usually, this is our routine. Huh? This is really our routine with Pierre. What we do is we try to map out the bigger levels. So here we can see one right there. That's a monthly level right there. Where do we have 1, 2? We have another monthly level here. We have another one higher. But you can see that 61K, I mean, it's a bit useless to actually mark them, but let's do it just for the sake of the education purpose. On the lower levels, what do we have? So we have this monthly that got tapped, okay? So usually I wouldn't put it, but because this candle is not done yet, I want to see where it closes. Now, you have big chance that we're going to close below the monthly unless we have a 17% rise before the end. So in the next 10 days to come, I'm going to keep it for now, but this has been tapped. Okay, so this level, we're not expecting a rejection from it. However, what we can see is that here we're going to have most probably a new monthly that's going to be created. So I'm going to keep this one for now and be sure that after tonight, actually after the end of the month, to update this and to actually put this new monthly. But we will do it together, so that's not a big deal. We have another monthly that is coming over here. Another one below. Okay, so we have quite some monthlies here. Huh? Look, 9K over there. And then another one here. 6K. Okay. So we have our monthly levels. So monthly levels are usually very strong levels that you want to have on your chart, especially the first touch usually gives a very big bounce. You dive into the weekly level. So weekly, Pierre, do stop me if you feel that I'm missing any level, huh?
Everything seems perfect right now.
Amazing. I have a quality check on what I'm doing. I feel like I'm doing an exam. Okay.
Boys.
So here I map the 3 weekly pivots that we have. So the first thing that you can see, okay, we're here. First thing I can see is that we're building lots of resistance above us. So we're dumping, building resistance above it, and there's nothing. Here, there's nothing. No support, nothing. We had some support that was built in, and we went straight through it, okay? So where is the next line of support? It's over here. So just so you see, 34%. You have a potential here dump of 34% if you don't start to see some kind of reaction on the bullish side of the market. You have a potential 34% dump just by looking at this. We haven't put any kind of other indicators. Let's put this weekly over here. So this weekly is very close to the monthly. Usually what you do in this case is that you delete the lower time frame level, so the weekly level, but let's keep it because it's a bit lower. I personally like to keep them. I don't know, Pierre, what's your view on that? But personally, I enjoy keeping them both. It reminds me that it's actually even stronger than just a single level.
Yeah, pretty much the same. The fact of the matter is that you have a previous high that was made. If you go back to the left, you will see it.
Yeah.
That might, yeah, you know the upper wick?
This one here?
Yeah,
yeah,
this one, yeah.
Yeah.
This one is an intermediate level that can be respected.
So, so this could, yeah, so as in SR flip, you mean, right?
Yeah.
So actually, this is a very, very valid point that we haven't hit this. Basically, this was the high of. So okay, so that's one thing too that we forgot to say is that we're on Bybit, and Bybit, as you can see, the data starts in November 28. November 18, sorry. So I know for a fact that we went higher in November 17, December 17, we went higher, right? But those levels were touched. It was around 20,000. So those levels went through. So now we would actually to make sure that this is an SR flip and we don't have other things, maybe we should go check on other platforms. So let's see, for example, Bitstamp. What do you think? This could be a good idea. Bitcoin, US dollar, Bitstamp. It has,
Bitstamp is cool.
yeah, it has lots.
Coinbase also.
Exactly. See, look at that. Look at that. Where do we go here? Here we have, so this is what we were talking about exactly. Yeah. So you're talking about this wick.
Yeah.
I was talking about this one. So this one, and it's actually pretty cool to see. Look at this respect here, right?
Has been the previous low, yeah.
Exactly, exactly. So if you actually take the candle close, not the wick itself, I mean, it was a perfect support. Support once,
This is what
support
I
again.
wanted to talk about it.
Exactly. And then it dropped. And you might think this is nothing, but this support here, when it held, we went up 33%.
33%.
Just from one
It's
level.
amazing.
Exactly. It's an amazing reaction to see. The second one, the second time it was touched, traded through, and you had no weekly candle close below it. Another 13% rise before the dump. Okay, so actually you touch it once, you touch it. Sorry, you touch it once, you touch it the second time, you rise at every time you rise lower, lower, and then you break the level. Okay, so what is Pierre saying, and it's actually a very valid point, is that now maybe this wick, okay, so why not the candle close? It could be the candle close itself, but the candle close had action around it already. But the wick, as you can see, we went through it and we never back tested anything. So the wick could actually be here, a level to keep in mind. So here on Bitstamp, it's at 13,880. So let's, sorry, my bad. Let me just go back here. Okay. So where do we, 13, okay, you see there's a little discrepancy between Bybit and Bitstamp. Here you have 13,916. The other one was 13,880. Okay, it's for me it's like really, you should see this more as an area. Okay, it can like exactly like we saw for the previous SR flip level. Oh, I'm really sorry about what's happening right now. Yeah, okay, that's a problem. So just give me 2 seconds, yeah, because I think I'm on the edge of losing my girlfriend. Give me just a little second here. Okay, I'll be right back. I'm just putting the mute on.
Yeah, so I'm gonna speak until he finishes his thing. Yeah, you often find like previous high levels that will come into play when you hit them. Um, it's not saying that it's a 100% rule, you know, but yeah, whenever the level get hit, you expect it to be respected. Why? Because all the players that like, for example, if I don't have the mouse exactly, but all the players that sold took a sell position at 13,900 will put the stop loss above, right? And so all the guys that went there maybe are still in their position. You don't know. And the fact of the matter is, whenever we get back to this level, they want to go out. They were saying like, oh my God, I'm above, no, above water, below water, and I was losing my gain basically. And whenever this level get hit, those people would get out of position basically, and so you would expect a reaction straight away. But that's something that you need to see on the order flow and other software that might give you an edge trading this. This is most likely something that you would not preemptively trade. Like you would not put an order and just say like, yeah, this is going to be respected. You would not.
Okay, so I'm back. I handled the girlfriend situation. So
I was speaking.
what you were speaking? Yeah, yeah. I saw that you took
Yeah,
the lead
I
over
was
there.
thinking. Yeah.
Okay, great, amazing.
Okay.
So we were mapping all those levels. This key SR flip, So SR means support resistant flip. Okay. So basically, a resistance once it's breaking becomes a support, and the same thing on the other side. So usually like to keep those noted. Okay, it's important. Now, what would be the next thing to do? So we mapped our weekly, our monthlies. Let's go into the daily chart now, the daily time frames. So, okay, on the daily, we have some interesting thing locally. You have here a very nice daily at 21 300. I like this area a lot because here you have like a key you see on the daily level. So basically the price is doing this. Okay, so okay, here it was not making a lower low, but I mean, you can see that this is a key area, this is a key area, this is now a key area, and this was a key area. Okay, and so this for me, if price ever manages to come back here, this is going to be a big resistance. You can see it because of this pivot high, you can see it because you have a weekly, you have a daily level, above it you have another weekly. So make sure that here there's gonna, I'm almost sure there's gonna be a reaction over there, and that's something I'll be looking at. Okay, so let's delete all that. Let's keep on doing our daily levels. So which one do we have that is a bit closer to our price action? We have one right there. That's a daily pivot, 17,500. Okay, this one is untapped. So as a rule of thumb, you want to really keep the levels that are untapped, okay, because they provide the nicest reaction the first time they're getting touched. Second time, it's you can have amazing reaction the second time, especially if you have like a swing failure pattern. But usually you want to have like the first touch. This is where you want to get involved. So locally, this is what I see. One level over here, 23, 22, 300. Sorry, 22, 400. 21 400, we have 17 500, 600-ish, 16 300, and this one, as you can see, so this one I'm gonna map it even though it was tapped for multiple reasons. First of all, it frames the price action. Okay, and this is what's interesting, because here you can see that the price is between this daily level, this daily level. Right now we're above here, maybe we can do this and then this. So because this daily level is framing to the lows, to the bottom, I would like to keep it, but keep in mind that it has been touched already, so the best reaction so far was given already. And by the way, let's check on this reaction. We hit the daily level and we went above, 8%. You're talking, so you are super low in the charts. Okay, look at where we are. In this whole move, in this little area right there, this daily level gave you an 8% trade. So this is why those levels are really fantastic, and you should have them marked because they can give you amazing opportunities. Even locally, on a downtrend, you know that the price is going lower. Had you longed here, you'd have made 8% during a bearish market. Pretty cool.
Pretty cool, yeah.
Pretty cool. What do we have here? So here we have a few levels, but I think they got tapped already because I marked them before. 15.9 was tapped because, so now we have a new one over there. 15.300. Okay, so that's the one we like. We are doing a bit what we did last week. Do you remember, Pierre? We did this already. We mapped those levels, but I think it's important to do it all the time, or at least at the beginning, so that you have a clear view of what's the charting strategy. And then look at that. Everything else have been tapped. I mean, the next one to the downside is here. The next daily level after 15,300 is 11,000. You're talking about 25% drop. I mean, in all honesty, if this SNR flip doesn't work, and if we start losing the 15,300, we are going to jump hard. We're going to dump hard. I mean, from the way I'm seeing it, anything can happen in the market as well. That's also a rule that you should have in mind. But by experience, when you see like this kind of empty zone, this for me is a no man's land. There is no resistance. There is no horizontal resistance, whether it's a daily or weekly, a monthly pivot. There's nothing. The only thing you have is this SR flip, which I doubt will be the support. It could be. It
That
could be.
amazing. Yeah.
It could be because it is a key level. Let's not forget it. But it could also like straight go through it because there's nothing here. All this area here, there's nothing. So it's good to keep in mind this, you know, put this line in the sand here, the 15300, saying, okay, if we lose this, we are going lower. So this is like the last level for the bulls to defend. If they don't want to see the price drop 30% more, they have to defend 15300. So this is why this trade is really, really, really interesting because you are sure that people are going to get involved here. They saw this liquidity, they are interested in this. Market makers are probably going to try to go and grab it. So there's something very, very interesting about that. I forgot to do the thing here. So this is a weekly. Okay, this is a daily. So I'm just organizing the chart because you will see at some point you have so many indicators that if you don't do that, you get lost. I remember at the beginning, usually my charts were so ugly and so clingy. Now it's nicer. Okay. So we mapped our horizontal levels, okay? Lots of resistance to the upside, a bit of support here, but we're like at the extreme low. So we really, really want to see the bulls getting involved. And if it's not here, it's going to be lower. And it's going to be like 30% lower. And it's going to be around this 10K area where there are lots of support. But yeah, it's a 30% drop, huh? Moving on now. So now that we did all those levels, let's go more into the range, the fixed range pools. Okay, you want to see the volume now. So what we can see from the start here is that you have like this range here. Pretty obvious to see. It's really easy to see. Huh? Let's not. Let me just remove that. Okay, so you have a range here. You have another mini range above. I think you can see it, guys. It's a lower time frame, but it is a range too to keep in mind. Okay, that's another range here. And then what? And then you have like the very big upper range. That was like the big range. That was the big range where we arrived to 69K. We broke to the downside. We started ranging at the low, and then we broke again. So actually, it's actually I love doing this. I love like really dividing the chart into multiple range areas because it gives you like a really clear view of what's happening. Range, drop, range, drop, range. We dropped. So now the idea is to think: are we going to drop lower? And if we do, remember where we can go. We can go like 30% lower, or are we just going to be ranging here between this key level of support? Range, and maybe start a reversal. Right now, nobody knows. If somebody tells you he does, be aware.
He's lying.
He's most probably lying. Or he has lots of money. Like really lots of money. Okay. So let's do our fixed pool and let's start with this one here. Okay. So here you just go over the fixed, so the fixed range pool. Okay. So why do you want to do this? Because this was how long? 148 days. 148 days range. That's a lot, okay? And the highest level of volume is here. So here you have people that got the move on the wrong side. Here you have people that longed and the price went lower. So when the price is going to go back here, what's going to happen? They're going to get out of their position at break even, and so it's going to create a selling pressure because when you get out of a long, you sell. So expect here some kind of reaction. So let's just put this level here, and I would mark it as a key level, the point of control of the previous range, key level over there. Okay, value area low is right below it, so we can mark it as well. We can mark the value area low. Okay, and this is the value area high. Okay, now once we've done that, So the idea here is to think, okay, if Bitcoin starts to see some price, some strength, he's gonna hit this resistance. That was a support before, and now it's a resistance. So let's try to build a case for this thing. What do we have else here? Most probably we have a nice fib level. I can feel it. I felt it right. We have here the Fibonacci level retracement directly on it. So key pivot high, key pivot low, you go here, and this would be already, I can tell you, 19200 is going to be a very, very, very nice level to hedge. Keep in mind something, we dropped here super fast, meaning that we can go up super fast as well, okay? So trade the reaction.
Just as fast, yeah.
Exactly. So very good resistance area, but because of the strength of the move down, this is also a pattern that you see in Bitcoin, range, and then go back up. At the same strength that you went down, you go back up with the same strength. This is something that happens a lot of time, okay? So even though this level is good, if you can start to see the price going here, without any single retracement, don't short here blindly. Just think, okay, you're wrong, and wait for a higher level to short, okay? But here definitely is a good level of resistance. I would have some alerts here, okay? So let's just put this into a folder, and let's call it previous range value area, okay? Let's close that. Let's close this thing, okay. Now, we were also saying that we had other range, right? Oh my God. Okay. So the previous range that we had was also this one. So that's like a very high time frame perspective. Let's just do it just to have in mind where it would be, but yeah, okay. So if you actually pull this fixed range pool, you can see that you have here 47 is also going to be a big level of resistance. But you're talking about 190, 190% rise. This is most probably not going to happen next week. But just so you know, look at this. I mean, look at that. Look at that here, right? You have here high before the dump. You have the point of control of the whole range that's on that. And I'm sure we can get something over that. Yeah, we do. We have the CC. This, I'm already telling you that if we don't go lower than that, 47 is also a very, very nice area, okay? But
just be careful because you are on log right now. So if you do a fixed pool,
oh, you're right.
A fig pool.
Oh, you're right. Let me see. But I think the fig pool was on log as well. No, it was not. On log it looks like that. And what if
for the sake of it, yeah.
Okay, so if you remove the log, actually, I mean 60k, 15k is still. Oh Jesus Christ! Everybody's calling me today. So here you have a nice resistance, okay, but it's so far away that it makes no sense. You can plan for it. You can say for now, okay, 47, I know I want to short it, but you're at 16, so it makes no sense. But there is a level here. There is a good confluence of resistances. So it's interesting to see. But unfortunately, we're way too low for that, okay? The value area low is over there. So actually on the high time frame, if you want to imagine that the Bitcoin would go back up, yeah, the first level that you want to see reclaimed is this one here. It's the value area low of the previous range, right? I mean, the first level is the low of the range, which is here. But once you've reclaimed this, you want to enter back the value area low, because if you do, then all this price action here would have been a deviation of this range right there. And you can expect, when you enter back the value area, a full rotation to the highs, at least to the value area high, which is here, or even to the all-time high. But the first level that you want to see reclaimed after the low of the range is the value area low, okay? And this is at 30K. So we are very, very, very far away from a full reversal or anything, okay? But it's interesting to have this perspective in mind, to think to yourself, okay, what would be, at what point do I shift my bias and I start thinking, okay, you know what? On the high time frame, Bitcoin is going higher. Right now, for me, it's not. But this is what I would like to see to shift my mind. Okay, So let's close all that. What was that? That was nothing. Let's close this area right there, and then we had this one which is higher. Okay, I mean, you understand the process. Basically, you just take the fixed range pool, you take that here, boom, 30k. 30k, what is 30k? We just saw it now. 30k is that. It's the value area low. You have the point of control of the previous consolidation area, the value area low over there. So this is going to be 30k, and it's a psychological level. 30k is going to be a resistant level as well. Okay? Now, let's go into a more local perspective, because this is what we want to see. If we want to have a trading plan for next week, we need to know what's going to happen next week, not what's going to happen in a few months. So around this area here, so we dropped from here. We know that 19,200 is a level, is an interesting level, okay? What do we have if we go in the lower time frame? Because this is very local here. So let's go into the 4 hours, right? The 4 hours, you have this shape that we talked about that we can see obviously, right? And if we can see it, everybody can see it. So you could say that this is a triangle right there, but this has been tapped through. You could argue that maybe this is the one, okay? But I don't like it because it hadn't hit the highs of it. But I mean, even if it's not like a perfect triangle, you can see what's happening. You can see that the price here is contracting. The price here is contracting. Whether it's a real pattern or not, you have liquidity here, liquidity here, liquidity here, liquidity here. And same thing here. Here, here. This area was not taken, and here. Okay? Let me just check. No, it was not even taken by
the market likes to grab liquidities also.
Exactly. So just by
I'm not sure this is a known fact by most people.
Yeah, you're right. You're right to say it, but basically those guys have huge positions to fill, and they cannot fill it anywhere because they need, if they want, let's say, to open a short, they want somebody else to actually buy their selling positions. Okay, so they want the equivalent long in front of them. But when you're talking about hundreds of millions of positions, you need to find hundreds of millions of the opposite position. Where do you find those? At those levels. Here, people put automatic orders, and this is what draws them towards those levels because they know that they can fill the positions there. So an interesting idea would be that we fake out either from here or from here. We take the liquidities and then we dump. Okay, that's the scenario that we already had last week, but it's confirmed after this week of price action. This is even more confirmed, for me at least. I am expecting at some point a very strong swift move. Logically, because we're in a bearish market, I would expect it to go down, but it could still go back up, especially if we kind of see a strength on the stock market and some kind of a weakness on the dollar. Maybe we can start to see a reversal, and this price action here would be a deviation from the previous range. But right now, it's just speculation, okay? So let's go back to business here. The first thing we want to do is the volume level, okay? So you can take a fixed pull from here, okay? And you can see basically, look at this value area high, how well it was respected. Wick, 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 wick to the dollar here, okay? This is a key level. 17K is important. So let's mark it down. Value area high. Okay. To the lower side, what do we have? We have the value area low. Let's mark it as well. And you have the point of control that we should also mark. Right there, okay? And it's kind of a, like you see, like the more we get closer to the center of this range, look at the volume growing. Like you have lots of volume here, here you have nothing. And here you have lots of volume. So really, this point of control is also a key level to have in mind. So this is the point of control of current range, okay? So we have that. Let's put above the daily level that we have. Okay, some nice influence here. Do we have weeklies? We have nothing, no monthly here, okay. So here, the only tools that we have to play with are dailies, the point of control of the range, value area low, value area high, okay. is there another fixed pool that we could be doing? So there's another one that I like, but it's more visible on the 1 hour. It's here. See, so you're encapsulating the price even in tighter levels, okay? And those levels are respected. Look at the respect here, look at the respect here. And here the same thing, wick under it, wick, 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 wick. So this is support, this is resistance, okay? But basically the value area high of this level is encapsulated in the bigger one. Point of control is exactly the same. This is a key level to have in mind, okay? But here, it doesn't give us any other information about the value areas. I would keep that. What I do like is this little consolidation above here, which could really act as a resistance after getting everybody bullish. 18,300. Yeah.
That's a good plan.
That would be interesting. But the thing is, we need to have a confluence with that. I mean, the confluence would be, the idea would be that we take this high here. We dumped, rise to this high, and then we enter this range. This is an important level. You have the point of control that's below. Maybe like a quick wick. Take out the stops here. Stop hunt here. The people who shorted here. Bam, you take them out, and then you go back down. Could be an idea.
If you do a EMC pool, you will see the confluence there also.
Okay. Somebody's been doing his homework. Let's check that.
At that one.
Okay, so this one, okay, so I took the pivot high over there.
Weak one.
Yeah, I understand.
Yeah.
And so what you're talking about is this one most probably, yeah. And there's the confluence. So why this pivot is important? Because this pivot marked really the start of the impulse down, okay? When we were here, we were still in this range, okay, in the previous range, but we were in the range low. And then something happened here, and I'm sure that we can see the volume backing up our thing. You see? This here marked the beginning of the impulse with volume, the impulse down. So this is an important also level to have in mind, is that this, and I remember at the time 2600, we were talking together, Pierre, and we were saying, this is a good short. This is a good short.
Yes, it was.
And exactly. And we were from long here, and I had closed my long over there, and the idea was, let's take the short. But neither me, neither you were in front of the computer, so we did not take it. But that was an amazing short for many other confluences at the time. And look at what happened. I mean, you had a 24% dump, right? And this is just technical analysis telling you all that. So here you have a level. Clearly, it's interesting. But again, it's still higher than where we are right now. But it would fulfill the idea of faking out this consolidation. You go here, everybody gets bullish because, oh my God, we broke out the triangle pattern. We know that the triangle pattern, when it's broken out, you have to take this to here and then you add it. So the target is probably around this area. So people are going to be buying here, forgetting that you have a big resistance over there. And then actually what's going to happen instead of going up is that you have a dump and you resume the downtrend. This fake out is very, 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 very probable as well. Could be an idea. Now, there's one thing that I would like to add, which is called naked point of controls. And this, you cannot see it on TradingView, unfortunately. You need to have like a software like ExoChart. It's an order flow software. So I advise anybody to actually get this kind of software. You have Atas, that is actually a free version of this, but it's a bit more less entry level, to be honest. So let's check.
Both are free, actually.
ExoChart is free?
Atas and ExoChart. Oh, no, sorry. Sorry.
No, yeah. I mean, ExoChart is free if you stay on the daily level. Actually, yeah. When the subscription ends, sorry, you actually only have the daily view. But what's interesting about this software is having like the 1 minute view. Like you see real time, you see the volume, you see the longs opening, the shorts opening at key levels. It helps you to understand the reaction. So here, 17,287, we have a naked puck. I kind of knew it, but okay, let's do it. So 17,287. 17,287. So the way I do it is this. I go back to daily level because I like to see where it was created. 17,287. Wow, sniper. Okay, let's go above. 7 style, boom, that's it. Daily naked buck. Okay, that's great. So we have a level here. Do we have another one? That's the only one. Huh? All the other ones have been tapped to the upper side. Look at this. We're just creating resistance above. That's what we're doing. We've been doing this for the past month. 19662. Let's put it in. 19662. Where does that get us? 19. Okay. So you kind of have a naked buck here that is hanging out without anything else. Just by curiosity, if you bring this up here, not really, not really. Let's keep it there. Okay. I don't know if you see, Pierre, but actually this pivot that we were talking about, the impulse pivot, on the daily level doesn't exist, huh? On the daily level, we're not seeing it. So actually the pivot...
it can work, actually.
Yeah, it can definitely work, but on the daily level, it doesn't exist, huh? So people who trade
like
via daily...
It's hidden, though.
Yeah. Yeah, you're right. You're right. Hidden levels. Usually they give really amazing reactions as well. 2687. 2687. Where is that? What? Oh, wow. Oh, wow. We didn't touch this one. Okay. So that was the short. I remember now. The short was that we had the naked daily puck over there, and probably at the time, just because I'm interested, probably at the time we had some kind of a CC or something. I'm sure about it. Look at that. So at the time, just imagine that all this thing here doesn't exist. Okay, imagine all this doesn't exist. You have a pivot high, you have the pivot low, and you're just wondering like, what's the next resistance? Naked puck, the EMC, sorry, at this level, and look at this. Look at the reaction. You come here. I mean, honestly, this counts as tapped. Okay, it counts. It doesn't show on exo chart because it's like tapped or not. But this kind of counts as tapped, and this should be an entry, a short entry. It's a shame. That would have been amazing short. But just, yeah, see the strength of those moves. Okay. Maybe the last one, 2212. 2212. Again? You're kidding. Yeah, it's again, it's another front run here.
Yeah. This is one of the controversial one, like he hasn't been hit but by a few dollars, so
exactly. You can see it in two different ways. You can see it as there's liquidity here, okay? And because there's a liquidity here, if we hit it now, it's gonna have a big reaction, or it has been tapped already. So yeah, this is more about like, see the reaction. If you see that this is like blasting through it, yeah, you have nothing. If you see that you arrive above it, and then right after you have a wick, this could be a very low risk to reward short entry, to be fair. It's interesting to have it in mind, no? Okay. Do we have any to the downside? That's the problem. Do we have any to... So I know we do have one, which is a monthly level. A monthly naked buck. Okay? So I'm going to add it now. And to add it, actually, I think I need... Was it 2 years of price action? I think it was 2 years of price action. That's going to be heavy. That's going to be heavy. I mean, it's a monthly time frame, so maybe it's going to be fast, but look at this. Downloading the ticks. So we're going back 2 years It's not like trading view where you just need to have the price, you have the volume, you have all the information about the order flow, about the longs, the shorts that opened, and everything. So that's like a huge, huge pile of information that you're gathering when you do this. Kind of takes a bit of a time. But yeah, who said technical analysis is easy? While we do that, while this is loading, what else? Oops, my bad. What else can we do? We can do some FIP pulls. So that here, I don't know if you see it correctly. This is a pivot high. So I would take it to the pivot low and look at that. This is, I mean, this is the trade that we had last week, the trade setup that we were talking about. If I go to the other chart, you would see it. But yeah, it's always nice to go back to this, redo the analysis and find it again. It reassures you that it's a good level and that your technical analysis is good. Yeah. I mean, something in this range, you know. Here I'm a bit conflicted because I like this level, but I also like a lot this daily that is kind of framing the price action. So actually what I would be inclined into doing is shorting this if I see this, right? But if I start seeing like some weird price action around it like this, higher low, I'm not going to be shorting it here. I'm going to be expecting maybe this level instead, right? I want to see like a clear rejection here. I don't want to see something that makes me wonder if it's a good short or not. Because I know that this daily level here, because it's really like the high, you know, the high of the range, this is the low risk reward trade that you want to get into it. This is good because you have a nice confluence, but this is higher, and the higher you take a short, the better it is, basically. I also want to do something.
Also, if I can say, yeah,
of course.
Like you read my mind.
Yeah.
Basically, the first fixed range pool was a standard one. We like to do it like Net did.
So you have this here. So this is like very easy, basically, the range. So you take. But what if you include the price action that happened right after the initial like reaction during the drop? So you had the drop and then you had, because this is a massive reaction. You're talking about we hit this wick and then we went back up 11%. This is not nothing. This is something. So for me, we were dropping and then the drop stopped here. Reaction, resumed, but actually not really resumed. We entered a range. So you could argue that the range started as soon as you saw buying pressure over there, right? So you could take it back towards this. And like Pierre was saying, we like to do this because usually it has very good returns.
Results.
Exactly. And so here you have the value area high of the whole range here. So here you are framing everything that happened since we left the previous range. And what do you see? The value area high right above this little golden pocket right there, and the daily level a bit above it. So this area is going to be a resistance. Now, are we going to reject from this here, from the value area high, or from the daily level, or even from the SFP higher? Nobody can tell you. The only thing you can see is check for the reaction. You start to see a market structure change on the 1, 2, 3 minutes, for example. You start to see people that are trapped over there. You start to see some kind of divergences, absorption, anything that makes you think that the price is actually going to dump, and that's your trigger. Okay, you have the technical analysis that tells you this is a resistance. Now you want to see the market prove it to you, because the market can just literally go back up as fast as it went down. Okay, and in that case, so first of all, always enter a stop loss. Okay, a stop loss is not here to make you lose money. It's here to protect your capital. Okay, imagine you don't enter a stop loss here and the price resumes into the previous range. You'll go back to 22,000 and you'll be shorting from 17K. This is a huge loss on your portfolio. 23% loss for what? For one trade? It's not worth it. So always protect yourself with that. This is why you always see us put a stop loss. You need to enter trades and be protected at all time. Let's go back to EXO. Okay, so we have 2 years of price action? No, we don't. No, we don't.
This is the last available data.
Wait a second. That's it? We don't have access to before January. No way.
Yeah.
November, December, January. That. Oh, that's crazy. Okay, we don't have more than that. Okay, so luckily enough, we did our homework before, and we know there's a level. So that's why I didn't clean the other one completely. It's because we know there's a level, so I'm just going to load it back up. And that is actually load layout, so the main chart. Which one is it? 20? That's the one. Okay. So that's the main chart, and where, yeah, okay, that's my main chart. Okay. So actually, because we don't have access to all that, I'm going to add them manually, okay? So this is information that we gathered when we were around this, like we're dropping here, we gathered this information. Now we can go back lower to before, so it's important to keep them. You have here a monthly naked puck, okay? 15,375. Let's add it. You will see why it's important. Look at this confluence right there. Yeah, very, very interesting confluence right there because of so many things. Because as we said, you have the daily level which frames here. It was untapped, huh? So the first reaction hasn't been tapped. So here was the daily level where it was tapped and it went up 8%. That's another one that's untapped, that's framing the price action. And you have liquidity here that was created. You also have liquidity here. So we could really, really see like a big long squeeze, go back lower, reclaim this level, change the market structure, and then we go back up. And that for me is the golden long trade that we should be expecting hopefully next week. We don't know when the range is going to break, but honestly, we can see that we're getting closer to the apex of the triangle consolidation. So it wouldn't be stupid to think that we're going to get it next week. Or at least I'm going to be ready, you know? And how would you trade it? Swing failure of this move, okay? You can expect it at least to go back higher to this, because this is like a very key level, okay? So of course you're going to be taking profits along this way, because price can literally hit here, do the swing failure, go here, hit the first level of resistance, which would be an SR flip of this level, and dump lower, sorry. And so in that case, if you're expecting higher, here you'd be missing out because you didn't take any profits. You'd be missing out on a potential 3% trade. 3% is amazing, So take profits on key levels, okay? Pay yourself. That's very important. So actually, if we had to resume, I mean, the two amazing trades that I'm seeing right now are exactly the same than last week, Pierre. I'm not seeing a big difference.
No, because this is the triangle, right? So not every level is going to be hit, and we're just waiting for the conclusion of the triangle.
Yeah. We have to be patient here. Here, entering here and holding. I mean, first of all, where do you put your stop loss if you enter here? Like, where's your invalidation? And what are you doing? The only trade here that you could be interested in is a very high time frame trade, thinking, okay, we hit the lows and we're gonna go back up. And so maybe you can put the stop loss below this. You enter like a relatively small position because it's a big stop loss. You're talking about 7%. But I mean, what's the point? Where is the strength in the market? Why is this the bottom? Me, I'm not convinced. Right now, I'm not convinced that we hit the low, that the low is in. I would actually much rather want to see like a clear wick behind it and then the strength to go back up. And this This would be the scenario that I would really, really like.
This is worth noting that we do like we don't wait all day for the conclusion of this. We do scalp trading
Yeah.
all the time, but that's not something that we are gonna talk about today.
No, no, no. That's not the goal. I mean, scalp trading is good, but it's also very dangerous if you don't know what you're doing. You could be losing all the money that you make on those amazing trades because you're scalping and thinking that there's an amazing trade. So I would say scalp, leave it to when you become like really, really good at this and you trust your analysis because you have to be very fast. So this is really like long-term trades, huh? You're talking about this, like ideally, if we keep this idea that we had last week where we go down, we hit this, we go back up. Keep in mind, if we take a new low, this golden pocket doesn't exist anymore. Hmm? So this is going to be a weaker level. But then we go back to this daily level, up, and then we go back. And we could be doing this for 1 month, 2 months, who knows? Who knows? But by being prepared and by knowing that you have a very interesting setup here and very interesting setup at the highs, I mean, you're just taking low risk trades, right? Here, how much are you risking? 1.5% to potentially win 14%. And here, 1.7%, and you could make 10%. Those are golden trades if they're given. Again, this is not a financial advice. We're not telling you that you should enter those trades. You should be very, very careful. It's your money, and I advise you to actually use paper money more than trading and real money, especially if you don't know what you're doing, because in no case we're going to be setting limits here. Clearly not. Because you need to see the reaction. You need to see the market proving you that this is a resistance, this is a support. It just takes one guy with lots of money and then that's it. Your whole analysis is gone and you just lost money instantly. So be patient and check the reaction. Okay. Do we have something else that we want to cover, Pierre? Yeah. We wanted to go through the S&P. Do we have a bit of time to do that?
Yeah, just quickly, the DS and DXY.
Yeah. So that is also basically just to come back with so those are the two trades I'm looking for, really, the two swing trades I'm looking for, and you have to be patient. So put some alerts, and then you put an alert, for example, here at this daily level. You put an alert a bit before the level is hit, so you can actually analyze what's happening, and that's it. That's basically the analysis for.
You don't have to sit in front of the screen all day.
No, of course not. Of course not. Oh, clearly, or else you're gonna have big headache and vision issues. It's not doable. Okay, so let's go on the ES. So the ES stands for S&P 500 futures. Okay, and there is a very easy correlation with the Bitcoin. Basically, it moves with the Bitcoin usually. So when it goes up, Bitcoin goes up. When it goes down, Bitcoin goes down. That's like the very easy thing to say. Okay, I'm gonna remove everything. Okay, so there's nothing. And so what you want to see is when you want to buy in Bitcoin, you hope that the ES is at support, and when you want to short, you hope that the ES is at resistance. Let's do a very quick analysis here. Anyway, it should be fast. So during the weekend, there is no future price action. Okay, and it resumes. It's going to resume tonight. And then here, so you have monthly. Okay. So weekly, what do we? Wait a second. I didn't take the monthly. Yeah, we have a lower monthly here because if we break this, it would be interesting to have it here. Okay. So what you can see though, even though the ES is pulling back, this is a major bullish market structure. We are just going up and up and up, and this could be the low, and then you go back up. Yeah, this is like very strong. And until this is proven otherwise, until for example you take this low and you like if you start doing something like this, I mean, there I would start to think, okay, you know what? Actually, the ES, I mean, already now everybody's talking about bearish, but look at this. Here we went down, we took this low, and then bam, we pumped again. We pumped again. Here you went down, you take this low, and then bam, you go back again. So be very careful when you call a bearish market on the ES because ES is very strong. And until proven otherwise, it's for me this is still bullish. Okay, and this could be the low. It could definitely be the low. So monthly here. Let's put our key weekly levels. I especially want to put the ones that are like right above us right now and the ones that are right below us right now. Okay, that's the most important thing. Look at this monthly weekly level here. Very strong level over there. That's a key level. That's a key level. Okay, now we can always pull some range things here. So for the downtrend, look at that. Look at that. We're back inside of this downtrend. We reclaim the value area low, so you could really go back up. Huh? Resistance, big resistance here. That for me is a big, big resistance area. Yeah. Then where is it? It's here. Like you have this high here. Go here. I mean, you're talking about the global EMC pocket here, right there. You have a weekly level that's untapped. This is a crazy level right there. So
Yeah,
yeah,
I like this.
I like it a lot. Should we see the ES go? I mean, it is though 8%. Yeah, it's 8% above. So it's really not close by. But you could see this happen maybe not next week, but maybe in 2 weeks, for example. Yeah, 8%. You have a 4% week next week, another 4%. That's it. You're there. Ideally, what you want, and for educational purposes, what you want is while Bitcoin is hitting a resistance to see this. This is perfect. If you can see Bitcoin hitting the resistance at the same time the S&P future is hitting a resistance, that is a big, big, big added confluence to your short position. That for me personally is a big, big booster in confidence in my setup, because there is. I mean, we could go like that, but the probabilities are that this is a big level and this is very well respected. Like let's see some respect, because I mean we know it with Pierre, but I'm sure that you guys want to see like some proof, right? Look at that. Pivot high, pivot low, where the golden pocket, and then we dropped, right? If that's not enough, have the second one right there. Yeah, pivot high, pivot low here. And again, if you thought that we were done, we're not. Pivot high, pivot low, we're at the EMC pocket again, right? So this market is regulated by Fibonacci, basically. It is. So we hit it, we go down. We hit it, we go down. So here, actually, it's interesting to note that we are at a resistance. We are downtrending locally. I mean, locally since December 21. So it's been almost a year. So it's not that local. So we've been having a yearly downtrend. Lower high, lower low, lower low, lower high, lower low, probably lower high, right? So we could see this. We could definitely see this. Okay, this would be logical what we're saying. Okay, but in the event where we start claiming this is the big, 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 big resistance. So yes, we are at resistance. We want to see this claimed. So far, we have a big wick that went through it, hit the level, rejected. Okay. What if we add a bit of fixed pool range over there? So, okay, if we envision the fact that we're in a range right there, yeah, we have that. Let's take it a bit here. Okay, that's nice, but that's a bit random. And then here we did it already before. So what's interesting about this is this area of confluence right there. So it's no longer an EMC pocket. So let's just keep the ones that are relevant. This as well. Let's keep the relevant ones. Yeah. This level here, the monthly, the value area high, could be also interesting. But I mean, if we arrive here, if we start, I mean, reclaim and we arrive here, I'm not really sure. I want to short here because it means that you had like a bounce since here. You had a bounce of almost 30%. That could be more like the scenario here would be that we're actually resuming this trend. And this was a major low in the trend, and now we're going higher. So here, once if we reclaim this level, I'm saying if we reclaim it. If we get above it, I'm less inclined to shorting this, and maybe I want to see what happens at the all-time high. So line in the sand would be
it
this
would
here.
be seen as a sign of,
Yeah.
Sorry, it would be seen as a sign of strength. Really.
Definitely sign of strength. I mean, if you had to ask me what's the sign of strength here, would be reclaiming this level. First,
Yeah.
getting above this and reclaiming this high. Because then, by this, I mean, you could have like a pullback. It means that we're no longer making lower highs. We're taking the highs and making higher lows, okay? And so this downtrend could become an uptrend. And maybe we're not going to break and like that, and maybe we're just going to be ranging. And in that case, for sure, this short here, less interesting for me, okay? This one here, very interesting. This one here, this is where we are right now. So yeah, that's about it. If we had to see though the support, because if we had to see the support on this market, what would be the next key support? So this for me, I like it a lot, weekly and monthly level. Yeah. I mean, you have the weekly there, you have that here. What if you add, for example, 786? I don't really like it. Did we take the lows here? Ah, yeah, okay. That was okay. No real confluence with the Fibonacci placement. Maybe the 0.5 had something. Nah, nothing. Okay, so I wouldn't really trade the Fibonacci retracement just because we have nothing. Okay, what would be interesting though is this mini uptrend that we've been having for the last month. Where would be the? Oh, okay. Yeah. Okay. So yeah, that's starting to. We're starting to build a case around this here. This here, like take it as an area here, but yeah. So basically, that's a support area, right? No, that's not how. That's a support area. Sorry. Support area right there. We have the resistance area, like the big resistance here. No, it's not that. And we have the local resistance where we are right now and where we rejected from right now, which is this right there, which can go up all the way to the weekly and even the point of control. But I mean, you get the point, yeah? So we are at resistance, yeah? The most technical thing to expect is a retracement towards here, okay? Now you have this here line of support, which could provide a bounce, which would be very interesting because that means we don't break the market structure. So you could expect like this here, and then you go back here, you break that, you go here, and then you dump. You see, this could be like a very, very technical price action. You go here, you saw there is a rejection here, so you go back down, you hit this weekly level, which is, you can expect it to be respected. You go back up, the second retest breaks above it, you go back here. This is the big resistance. We reject from it either by taking the liquidity or not. Ideally, you want to take the liquidity, and then you dump more. Could be. Could definitely be the what's going to be happening. But what you want to see is the levels, and this is support, this is resistance until proven otherwise. So if this go backs up here and then back down during a resistance on the Bitcoin, a resistance price action on the Bitcoin, you want to short it. And if this goes here and we get our 15,300 setup, this is a support level. So you want to long on the Bitcoin. Even though everything is bearish, everything is telling you is going to go down. If you see a reaction here, you see a reaction, the same one on the Bitcoin at 15,300, this is a major, major boost to your trade setup. So yeah, I think that's it. I think that's it.
I think it is.
Yeah, I mean that was a very long session, no?
No, it was okay, you know.
Yeah,
1 hour and a half, something like
okay,
that.
1 hour is good. 1 hour is good. So yeah, we're gonna try to make at least one video like this every week, like for the very high time frame analysis. And the idea is to make more like day to day day-to-day
Yes.
videos to show you a bit more like the intraday, okay? Because those levels might not be hit next week, and you want to see what happens here more locally. So we're not going to do this now, but here the same technical analysis we did in the high time frame, you go in the 15 minutes, okay? You see, and you could do the same thing. Here you see you have lots of market structure, pivots, and everything. You can do the same thing, and you would be surprised how well everything is respected. Just look at this latest move that we saw. Just look at that. Pivot high, pivot low. See, bam. I mean, honestly, sometimes it looks like it's magic. It's kind of crazy. It is crazy. So anyway, thank you for watching, everyone. Pierre, thank you a lot for your participation as well, and the very relevant remarks. And yeah, I guess we catch you later on other videos. Thanks again, guys. Bye bye.
See you guys. Bye.